Hey, welcome back to the Mining Pod. On today's show, we're joined by Matt Williams of Luxor Tech to discuss their new Hashrate Futures derivative product. In this show, we talk about the natural counterparties for a product like this, how this even works in the first place, and then into some more technical discussion around FPPS and how any sort of Bitcoin mining financial product is going to change given the changes we're seeing on the mining pool level right now. Thank you to Foreman Mining, Master Mining, for making this show possible. You'll hear more from Foreman Mining in just a moment. Before we get onto that, if you're in the Rocky Mountain region, please check out our Bitcoin halving party on April 20th from 2 to 8 p.m. at the Independence Institute. Live vendors, conversations, and lots of Bitcoiners talking about the Bitcoin halving. So if you're in the Rocky Mountain region, be sure to join us. You can find out more information in today's show notes. Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry. Want to mine Bitcoin? Gator Mining offers premium hosting with as low as 1 unit per client, 95% uptime guaranteed, no curtailment, 24/7 monitoring and maintenance, in-house certified repair center, clean and renewable energy, all at competitive market rates. Work with an individualized team to get hash rate flowing your way today. Gator Mining, pioneering trustworthy crypto hosting for optimal mining success. Contact Gator Mining today at gatormining.ca. Bitcoin miners, be prepared. Hashrate is moving upstream towards power plants and low-value energy. Don't get cut off. Modernize and mobilize your Bitcoin mining fleet today with Upstream Data's high-performance load centers. Plug in Upstream Data's hash hut and monetize surplus wind power reliably in the blistering heat of West Texas. Plumb in hash generators and safely convert natural gas into cash in the frigid winters of northern Canada. Upstream offers high-quality load centers that will help you mine Bitcoin safely and reliably in every application and climate. Mobilize today and start mining upstream at upstreamdata.com.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Matt, welcome back to the Mining Pod. How are you doing this morning?
I'm doing good, man. Thanks for having me.
Good to see you again.
Yeah, it's been a minute.
In the home state as well.
Your home state.
My home state. Well, I like to include you.
I went to school here.
Some people I don't include as people in Colorado because I don't like them. But you're not from here, but I'll include you.
So you're a native. Do you have a bias against all these people that moved here? I would if I were you. Yeah,
definitely. But I really shouldn't because like my family moved here in the 60s, so it's not that long ago. But
yeah, but it wasn't like trendy in the 60s to move
it wasn't.
here.
It was pretty terrible in the 60s.
Yeah.
I've seen a lot of photos. Yeah. Yeah, my dad was born like 2 blocks from the last house I rented.
Oh, really?
So, yeah.
Oh,
I just moved out of the house recently, but yeah, a little bit of legacy compared to most folks. But yeah, you went to Boulder out here, right?
I did.
Yeah. Okay, before we get into that, we should do a bio because now we're on CoinDesk.
Okay.
And those people don't know you.
Okay.
So I think the mining pod has like decent loyalty. At least I like to think so.
Yeah.
So I normally don't do bios for most people, but now we're on CoinDesk, so I'll hand it to you.
Okay. So just want background?
Yeah.
Okay.
Background before we jump into all the stuff you're building.
All right. How far back do you want me to go?
The beginning.
I'm pretty old.
Boulder, because I already brought it up.
Yeah. Went to school in Boulder a million years ago. And after I finished college, I went, actually, even before Boulder, I started in the financial services world. So my grandfathers were both traders, my dad, 2 uncles. So right after I graduated high school, I started working at the Chicago Board of Trade on the floor as a clerk. It was a great job. And then I just did that every summer between semesters at college. Never really wanted to go into it. I was actually an English major in college. Like I had different ideals, but the money was really good.
Yeah.
And so when I graduated, got recruited back to Chicago, just did that for 4 years, just kind of worked as a clerk on the floor. And then just kind of kept going at it. I got my first real trading job, got offered a gig out in New York. So moved out to New York, became a oil and gas and then a nat gas trader. Did that for a number of years. The company I worked for sent me back to Chicago, became an ag trader. So started trading like soybeans, wheat, corn, you name it. Started my own company with a partner, and we did that. And then, after several years of trading, high frequency trading became more and more prevalent. It wasn't a game we wanted to get into. So took some time off, went back to school for computer science.
Oh, I didn't know that.
Yeah.
Okay.
So my whole goal was to be in product management. So I didn't never wanted to be a programmer or anything like that.
Yeah.
But I wanted to, be able to kind of like speak with developers and business, kind of bridge the gap.
Yeah.
Went to work for a company that built options trading software.
Okay.
A company called Option City. Did that for 4 years, and then got recruited to the Chicago Mercantile Exchange. While I was there, that's when I got introduced to Bitcoin. So in 2016, I was part of the corporate strategy team, and they developed like a digital asset group. And so, part of the corporate strategy group, I joined that, and we just started looking at the digital asset space in general.
Yeah.
I wasn't really, to be honest, wasn't that interested in it.
Yeah.
It was just like my boss is like, go learn the shit. And so I did. And so I immersed myself, just started learning about blockchain technology, started, just kind of diving in. And CME quickly realized that they wanted to be one of the first people to launch Bitcoin Futures. And so I was on the team that did the go-to-market for that.
Okay.
Which was super interesting. So my whole remit as part of that, there were other people that kind of worked around the technology component, but I had two main remits. One, we had an index that kind of tracked spot exchanges. And so my team built that index and made it available for streaming and people to consume, much like we have the Hashrate index.
Yeah.
And then we launched the derivatives around it. And the other piece that I did was go to talk to like all the stuffy TradFi people.
Yeah.
And kind of be like, hey, here's what Bitcoin is.
Yeah.
Which was, we thought it was going to be more like, here's how the futures contract's going to trade.
Yeah.
But we realized that no one knew anything about Bitcoin. And so we would go and we'd be like, all right, here's what Bitcoin is. Here's what blockchain is. Like, here's what, back then we called it, DLT. And so we'd go, but
You've had a few buzzwords already, blockchain tech.
Yeah.
Now DLT.
Yeah, sorry. I'm going back in time. But what was interesting is like we'd go to these meetings, and so these people would be like, "Well, can you like kind of describe how price movement works?" And we would show these charts where it would just look like, like a hockey stick. It'd be, but like more pronounced hockey stick. It'd be straight up.
Yeah.
And many times we would do like several of these meetings a day, and an hour later we do a meeting, and that chart would already be out of like this is 2017, right? And so it was just bananas. And people were like, well, this is a Ponzi scheme, right? Like, how can it move like this? And so that was my job when I was at CME.
Bottled down. Don't worry. It's just me.
No, I caught
you
it.
caught it?
I caught it.
Okay.
I have
I thought
cat-like
it hit the floor.
reflexes. So I did that. Long story short. And then the last 2 years I was at CME, I was on the corporate venture capital arm. We invested in like early stage in Ripple and DCG.
Okay.
And that was cool. So I got to sit on the board of some of these companies and really kind of learn from that side of things.
Yeah.
And then oddly enough, I was recruited over to a regulator to kind of help them upgrade their technology stack. And so National Futures Association, they wanted me to come over there and help them, basically revamp their technology. And part of it was like, we have this whole digital asset space that we have to regulate.
Yeah.
Did that for 2 years during COVID, which was unique and interesting. And I learned a lot about the regulatory space, but realized it wasn't really a good fit for me.
Yeah.
And mercifully joined Luxor after that. And here we are. Now at Luxor, my remit is building out Hashrate derivatives.
Love it. Okay, I want to go back to the English thing. I
Yeah.
know that's not really on purview for the rest of the conversation.
Go for it, man.
Do you miss that?
Mm-hmm.
Do you miss that? Like that? Was that like a thing that you enjoy, like in academic stuff? Is like English language or novels or that kind of? It's very different from finance.
Well, it is. And to be honest, I started off as an economics major.
Okay.
And so and I was doing that and I was pretty it was okay. I just wasn't that engaged with
Yeah.
it. And I struggle. I mean, like I came to college to ski
Yeah.
and learn second,
Yeah.
and so like my sophomore year, I skied 90 days and I almost failed out.
Yeah.
And then I realized
90 days is a lot of skiing.
It is a lot of skiing.
It's a lot of
Well, I had it set up so like my classes were only on Tuesdays and Thursdays, and
Mm.
every other day I was skiing. But that didn't go well. And so like I was on probation, like I had to like take a semester off.
Yeah.
And while I was doing that, I reflected and I was like, I'm not going to succeed unless I do something I'm really interested in.
Yeah.
And so I've always been like a huge reader and like
Yeah.
very interested in English literature. So I was like, I'm just
Yeah.
going to do this. I'll still do like economics as a minor and whatever. I'll figure it out.
Gotcha.
I was never really like, at the time, I wasn't really looking too far in the future. I just wanted to finish college.
Yeah.
And so I did. So, and then, I switched to English and I got straight A's from there.
Let's go.
Yeah.
Your favorite book?
I'm a huge Kurt Vonnegut fan. So
Okay, I don't even know that person.
you should find out.
Okay, we'll take some notes after.
Yeah. So I don't know. Slaughterhouse-Five, Cat's Cradle. Those are classics.
Okay.
I could go on and on.
Oh,
Colin Harper and I talk about this stuff all the time.
Yeah. Yeah. Him and I as well. I like Southern Agrarian. Or like, it's like post-Southern Agrarian. So like Shelby Foote, Percy Walker.
I love it.
Yeah.
Okay.
Yeah. So Colin obviously vibes with that deeply because he's Tennessean.
Yeah, I mean, I could get all over the place. Like Frankenstein is one of my all-time favorite books, but I also nerd out on Lord of the Rings.
Yeah.
And like, I've gone deep into Tolkien and like, I took
Speak Elvish?
No, but I learned. I studied Chaucer.
Oh, wow.
And learned Middle English when
You
I was
serious?
in college. Yeah,
No way. Okay.
I couldn't speak it now, but
Deep respect.
yeah.
I was a history major, so we definitely had to like learn about those things, but didn't get to go too deep, which is always the bummer part. And then English majors would get to go like deep into stuff, depending on like the topics.
Yeah,
And I was always very jealous of that.
it was
So,
cool. Like
yeah.
I took a whole semester of just learning Middle English, and then moved on to Chaucer from there.
Yeah.
Which was like a useless challenge.
Yeah.
But I loved it.
Yeah, I guess it's like left side, right side of the brain or whatever that meme is. I think the cool thing that I'm reflecting on is like in crypto, there's a lot of people who their thing wasn't traditional.
Yeah.
And they like found their way through it to something that's very interesting and interdisciplinary with crypto, where it's like, here's a computer science part, here's an energy part, here's a money part. And there's even like a lot of history involved in Bitcoin at this point. You see like Pete Rizzo's like whole feed is just that. So
Yeah.
Yeah.
I love that component of it. And like to your point, there's a huge diversity of backgrounds in this space, which
Yeah,
just makes
like
everyone
crazy.
super interesting.
Yeah.
Like in traditional finance, most people have, a business degree or an economics degree or some sort of finance degree. And like, but here it's just like everyone has, a background in energy or a background in, as an engineer, or it's all over the place. So
yeah,
it just makes it much more enjoyable when you go out and talk to people.
makes bar conversations a little better.
It
There's
does.
just like no boring people.
It's also like it adds a bit of humility because you'll go out
Yeah.
and think you're really smart, and you go talk to someone else who's like an expert
Yeah.
in something else, and right over
Yeah.
your head.
Yeah, happens a lot. It's painful. Okay, so you guys have had the announcement already, so I'm not
Yeah.
stealing any thunder here.
Nope.
But let's dive into that, and then I actually want to go back to the CME part.
Okay.
And hear about like how you like booted that up and how it like it informed what you guys are doing now. But we got to get the announcement first, so there's context.
Yeah, so I appreciate that.
Yeah.
We are launching Hashrate Futures on Monday. Yeah, we announced it about a week ago. This is something we've been working on since I joined Luxor. This was the end
Yeah.
goal. I wouldn't say end goal, but this is one of our primary goals.
Mm-hmm.
It literally took a year to get to where we're at now. When I joined Luxor, I had short hair that wasn't gray, and I didn't,
Can confirm.
yeah, no, I look like a caveman. Yeah, so it's probably important to at some point kind of go back and talk about the other products we have. But what's
Yeah.
cool about this is it's an institutional grade product, meaning it's accessible to everyone, but it's traded on an exchange. So Bitnomial is the exchange that'll be traded on. They have the only physically settled Bitcoin futures.
Mm-hmm.
They also have Bitcoin options, and then plans to do a bunch of other stuff as well. They're based in Chicago. We're partnering with them on this launch.
Yeah.
But basically what this does, it gives the ability of, banks and institutional grade traders, proprietary trading groups, hedge funds to trade Hashrate futures and get exposure to our space.
Yeah.
Like we've been trying to get people from that area to trade our forward markets and it had some success, but this is just broadens our accessibility. And I think it'll be good for the space as we kind of like mature to get, even like public miners would now be able to use this because it removes counterparty risk. There's just a lot of benefits that come with launching a futures contract. So yeah, we're super excited. The amount of work that goes into launching this would
You're wearing it on your head right now.
Yeah, exactly. It would deter most people if they knew. I mean, like you have to do like a lot of conceptual work about how it's structured. You have to do a lot of regulatory work working with the CFTC and others to get launched. There's like technical considerations, there's legal considerations. It's just, unfortunately I've had experience doing this.
Yeah.
So
you say unfortunately or fortunately?
Both. Both. I knew what I was getting into.
Okay.
In fact, like when I was interviewing with Nick and Ethan and Guzman and Eddie, I was like, the whole interview process, I was trying to convince them this was a bad idea.
Yeah.
I was like, you shouldn't hire me. Like, this is a bad idea. It's going to be really hard. It's hard. We might not be successful, blah, blah, blah.
Yeah.
But they were insistent, like they had a vision and they
Yeah.
convinced me of the vision, and here we are. And it's like, it's rewarding.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
I don't know much about Binomial. And then how does that interface with all these regulators? Binomial is a crypto native, I'm assuming, from the Bit.
Yeah. So Bitnomial, they launched back in 2017 and they've kind of been building ever since.
Yeah.
Their claim right now is, like I said, the only physically settled Bitcoin future, meaning like you could put a futures contract on and it will settle into Bitcoin.
Okay.
CME and other exchanges, Coinbase, their futures are all cash settled.
Okay.
So like for the people that are, want to stay Bitcoin native but trade futures products, this is what Binomial does.
And that was a big thing for you guys. You wanted a Bitcoin denominated or settled?
Yeah, well, so we do. To be clear, this will be a cash settled day one. Getting regulators to wrap their heads around something that's margin and settle it into Bitcoin, and that's also hash rate.
Yeah,
like getting them to understand what hash rate is.
Yeah,
is difficult. So we're baby stepping. Like we'll do a construct that they're familiar with, and then the next step will be Bitcoin denominated. And then honestly, like sky's the limit from there. We can do transaction fee derivatives, difficulty futures, options, which
transaction fee one's going to be really cool.
Yeah, we're working on that.
That's sick.
We're pretty excited.
Hedging volatility for transaction fees using a product like this.
Yeah, I only wish I could have launched it like last October or last May. But
yeah, more time ahead though. Okay, but we should take a step back for people who don't know even what a futures product is. So
so what futures do is it basically gives a forward indication of what a price is going to be.
Yeah.
So like you can look at Bitcoin futures. If you look at it on CME Group or Coinbase or wherever your chosen platform is, you can see what market participants think Bitcoin is going to be.
Yeah.
There's a fancy word called contango and backwardization. So contango basically means that for Bitcoin futures, people think price is going to go up, right? So if you look in the forward curve, prices are higher than they are now as you go out in time.
Yeah.
Hash rate is the exact opposite.
Yeah.
Due to the network difficulty increases, there's a slow downward trend in the halving, of course, in hash price. And so that's backwardization. But long and short of it is futures give you an indication of where this market's going to be in the future based off of where people are willing to buy and sell. And that's kind of the crux of it. Where they're beneficial to the market is for people. There's two main use cases. One, if you're someone that has price exposure, you can get certainty in the future. So a future will allow you to lock in a price in, say, August. Post halving, you're happy with where, let's say, it's projected to be $60, right?
Yeah.
You can lock in that price and get price certainty, and then it will help you with your, projecting out your free cash flow.
Yeah.
Right. And that applies to any commodity there is. On the other side, there's, speculation. There's people that want exposure to Bitcoin or hash rate or crude oil or whatever. This gives them exposure 1 month, 6 months, 12 months out. And, they can have an opinion on where things are going to go.
How does this fit into the rest of your guys' portfolio products? that you guys have been building out?
Yeah, I would say it's supplemental.
Okay.
So we have 2 forward products right now. So one is what's called a non-deliverable forward. So it's
Mhm.
basically a cash settled forward.
Mm-hmm.
It looks very much like a future.
Mm-hmm.
It's basically the idea being 1 petahash of hash rate,
Mm-hmm.
anywhere from 1 month to 1 month to 6 months out. We have a market. Buyers and sellers will tell you where they're pricing it.
Yeah.
The difference between a forward and a future, the future is much higher regulated and it's standardized.
Okay.
Forwards can be like bespoke durations, like you could do 42 days or 95 days or whatever. And then like you can kind of adjust the contract specs.
Yeah.
And then the second product we have is what's called a deliverable forward or physical forward. That one's very different. Basically, what that says is if you're a miner, you can sell your forward production and get Bitcoin up front.
Okay.
So if let's say you're a miner, do you mine at all?
I do mine.
Okay.
A few miners.
Okay. So let's say you have a few miners and you want to, let's say you have 1 petahash
Mm-hmm.
or 5. I don't know how much you have, but let's say you have 5 petahash.
Mm-hmm. That'd be nice.
And you get X amount of Bitcoin over 6 months, right?
Yeah.
And that's variable depending on hash price. But effectively what we'll do is we'll price based on our forward curve and say, we'll give you that effective amount of Bitcoin that you would get 6 months from now. And, there's a bit of a haircut for cost of doing business, but like you'll get a lower cost of capital than you would if you were trying to finance.
Yeah.
And then what you do with that is up to you. But typically people use that money to buy ASICs or, pay their energy costs or pay down debt. Basically access to capital that you need as a miner.
Yeah.
And then what you do is through our pool, you basically allocate that hash rate and that's paid to the buyer through our pool on a daily basis.
Gotcha. Okay.
And so that's our suite right there. So the futures are complementary to that, and in that it's like it's more highly regulated, standardized, institutional grade product.
And it allows like a different category of buyers for hash rate.
It does. I would say, it's still accessible to miners. Like the barrier to onboarding to this is you have to sign up with what's called an FCM.
Okay.
FCM is like an intermediary between a trader and an exchange, and they handle like your margin. So basically, if you want to trade on leverage, which you can, you sign up with the FCM, you fund the account, and they'll typically give you somewhere like 2 to 3x leverage.
Yeah.
And they'll help you with connectivity to the exchange, and off you go.
Okay.
But like, so a miner, like for you, for example, or anyone, like the minimum account is like 25 grand, maybe less. So you can come in and trade 1 petahash of hash rate with not much money. They'll do the typical onboarding stuff, KYC stuff like that, but you could be up and running in 2 days.
So I'd be the seller in that case, right? Like selling my hash rate?
You could be on either side. If you want more, if you want synthetic exposure to hash rate, you could be a buyer. If you want to be a hedger, then yes, you'd be a seller.
And this product, because it's institutional focus, allows a different class of buyers than the forwards would necessarily, because like they're a little more comfortable.
Yeah, exactly.
Okay.
It's more like it's a construct that they're already familiar with.
Yeah.
And the lift is much smaller. There's a different onboarding process for forwards.
Yeah.
It's more bilateral, and the main concern in that space is counterparty risk.
Mm-hmm.
On a futures contract traded on exchange, those trades are guaranteed, so there is no counterparty risk. So that's why it's easier for institutional people to wrap their head around it. So like banks could trade it, hedge funds, family offices, you name it.
And that's kind of been like the problem with a lot of these hash rate products, right? Is like it's hard to get the buyer and the seller together in the same room. Like there's obviously a market in the sense that there's people who want to sell hash rate, and there's some people out there who do want to, but like bringing them into the same room and providing liquidity has been a problem historically, right?
I would say problem might not be the right word. It's been something that we've had to overcome. Like it's been a lot of our effort is actually the main problem with these forwards and hash price in general. There's no natural hedgers on the buy side.
Okay.
So what you have to do is you have to get a diversity of participants in there, to your point.
Yeah.
So a lot of our BD efforts are, educating crypto native hedge funds or family offices or market makers or prop groups. And it's just like a educational barrier. So like we spent a crazy amount of time doing that. And that's how we've built liquidity over time.
Yeah.
And that's how we've had some success. But yes, to your point, it is a challenge.
Yeah.
And I think futures will definitely help us overcome that.
Okay, stepping away from the product, what do you like about your job when you're doing this the most? Like the education part, relationship building, even like conceptually, you have to like zoom out and kind of structure these things. I
Yeah.
kind of imagining like a beautiful mind and you're like in the dorm room writing on the walls. But I don't know
But
if that's fair.
well, it's fair in the sense that in a beautiful mind, he was technically just crazy, right?
Yeah.
Yeah. So yeah,
There's something to it.
that's appropriate for me. But yeah, I mean, all right. I'll start with what I don't like first, and then I'll get into what I like. Like, there's a ton of legal work that goes into it. So I'm getting really tired of reading through legal documents.
ChatGPT.
I know, dude. Oh my god,
It's
it's
so
a lifesaver.
Yeah.
Freaking lifesaver. I love it so much.
It's so good.
So that part kind of sucks, to be honest. The regulatory piece, it's mostly upfront, but there's still like ongoing.
Yeah.
There's a huge burden from a regulatory perspective. That's not fun at all. But it's a cost of doing business. But the fun stuff is, Luxor's afforded me the ability to really drive this from ground zero. Like we built it from scratch. We've got to exercise our intellectual curiosity. Like, I mentioned transaction fees. We started off with a forward contract with dollar denominated hash price. Then we did BTC denominated, and then we did the deliverable forward.
Yeah.
And like I got a really awesome team. Ben Harper and Dan Rosen on my team are brilliant.
Dan's in Denver. Shout out Dan.
Yeah,
They actually did a great presentation at BitDevs the other week.
Good.
And it was like, a lot of people were interested in the product and had never heard of it before because of that. And like him coming and explaining it was very cool.
Yeah. You don't see too much of Ben from my team, but he's really like the brains behind a lot of this stuff.
Not to give attention to Ben.
Oh yeah, Ben's awesome.
I love you.
Yeah, but we just have a great team. We work well together, and what I like about it is working with these guys all the time, building new things, launching the futures, thinking about transaction fee derivatives, difficulty derivatives. We have all these ideas around like Bitcoin denominated energy contracts and like really just building it out. So that part I like quite a bit.
Yeah.
And then, I was never really like a BD kind of guy, but like I've grown into it.
Yeah.
But I like it in this space just because of what we talked about earlier. The people are so awesome in the mining world that it's just, and they become friends of mine. So now like my BD calls are just like with people I know already. And like it's a tight knit community. So I love that aspect of it.
Yeah. I actually kind of like the BD side. I've been doing it more for the podcast, and it's been kind of fun.
Yeah.
Like put on a different hat. So
totally.
Yeah, I feel that. For the rest of Luxor suite, so you guys have a pool, then you have like all these financialization products, Hashrate index. You guys have like a very full stack. I mean, we didn't even touch Ordinals stuff.
Yep.
How do you guys see us progressing over the next 6 to 18 months going into a bull market? Where are you guys putting like time and resources as a company to like drive these products forward, and where do you see like the market picking those things up?
Yeah, I mean, I'll speak first to my business line because like we're actually hiring right now if anyone's interested. But we're trying to grow our team. We also have what's called an introducing broker business that we just launched. So basically, that business helps facilitate onboarding to these instruments. So if someone wants to trade futures or options, not just our products, but like energy contracts or Bitcoin derivatives, we'll help you onboard and do all that stuff.
That's sick.
Yeah. And it's nice. Like what's cool about it for at least the mining space or anyone, they don't pay for it. They come, we help them get all the cost gets passed on to the exchanges.
Yeah.
So we can be helpful. I always view Luxor, one of the great things about the company is I think we're, beneficial to the community. Like we're always trying to help people and educate. Yeah. And this is just another extension of that. But anyway, to answer your question, like we're going to devote more resources to this business line and growing it. I think the same can be said about firmware. There's been a heavy focus on that as well, and that's growing quite a bit.
Yeah.
Obviously, like you want to maintain and grow the mining pool because it's the glue of the organization. But I think a lot of the focus is just how do we advance these new business lines, such as my own and firmware.
Yeah.
The logistics business that we just launched, and then keep at it with ASIC brokerage is another glue piece.
Definitely. Yeah, shout out to David Erlacher, also in Denver. So you guys have a good footprint here.
That's right.
So he did a presentation on firmware, same time that Dan did one of the BitDevs here in Denver. And the natural question arose, like, how do these products relate to each other? And like, I was like, they don't really relate to each other. But unlike maybe like a larger level, they all are synergistic. I can use that buzzword since we're using them during this recording.
Yeah, I would argue like you have the mining pool as the center, right?
Yeah.
And like that's what brings everyone to Luxor. And then
Okay.
you have all these ancillary tools. Like they might not like firmware and derivatives might not have a direct
Yeah.
correlation, but these are all things that a miner needs.
Yeah.
Right. So like I like to think Luxor's ambition is to be a one-stop place for miners,
Mm-hmm.
and even like, people that want exposure to the mining space.
Mm-hmm.
That I think that's how you look at it. You look
Mhm.
at like the glue pieces of the pool, and then you have all these other products that it's like kind of like an infrastructure company that'll help
Yeah.
you with everything.
Yeah, definitely. When you guys are competing against other pools, have you seen them build out any products like this? I can't think of anyone that's really doing something.
I've heard whispers, like
Yeah.
a lot of them.
Yeah.
Like you always hear like, oh, Foundry's going to do this,
Yeah.
or Amppool's going to do that, but I
Yeah.
haven't really. And to be honest, like I've said this many, many times, I'd be more than happy to help them build out. Like,
Mhm.
I talk to people at Galaxy all the time. I talk to people at Foundry. Like, if they were interested in doing it, I would actually help them because I think
Yeah.
it's better for the space to have multiple options. And I think
Mhm.
like if someone else had a forward market that had liquidity, it would help us with our liquidity because people have multiple avenues and there'd be arbitrage and like
Yeah.
it's actually a very good thing for the ecosystem. So,
Yeah.
but to answer your question, I don't know of anything out there.
Yeah. Me
I've heard-
either.
I've heard of developments,
Yeah.
but
Yeah. Pool business. As Nick said, Thursday, or today's Thursday, Tuesday night at Empower. Terrible business to be in the pool business.
Yeah.
But you guys get to build all these cool things around it, which I think are like going to be larger in the future, or
Yeah.
hopefully.
yeah, I don't like to use the term loss leader because I think it's kind of inappropriate
Yeah.
word, but like I like to say glue. Like it is the
Yeah.
glue of the
Yeah.
space.
It's
and
very sticky.
It's-
right?
yeah,
People don't
well,
leave their pools normally.
they can.
They can, but they normally don't.
It's not, I guess as a business operator, it's not as
Yeah.
sticky as you'd want it to be.
Mm-hmm.
But I don't know. I think that space is going to evolve a bit too.
Yeah.
And maybe it will get more sticky, but I don't know.
Yeah.
I just think it's something that everyone needs.
Yeah. Yeah.
It's not the sexiest thing in the world, but you need it.
Okay, let's put this into reverse and go back to CME.
Okay.
And talk about the Bitcoin product you guys launched. And then I want to bring that over to like Hashrate products and like
Yeah.
how those flow together.
Yep.
So I'll hand it to you, like the CME project. How did you guys come across like wanting to build a Bitcoin futures or any Bitcoin derivative?
Yeah. So go back to 2016, 2017, there was a ton of enthusiasm in the space around Bitcoin.
Yeah.
And there was actually at the time, there was a 3-way race to
Mhm.
launch Bitcoin futures. So there was CME Group, the CBOE, and ICE were all
Mhm.
trying to launch a contract at the same time.
Did ICE ever do that?
They launched afterwards.
Okay.
So ICE backed is ICE.
Oh, okay. That's right.
Yeah. So they
That's right.
came later.
Yeah.
There was a lot of hype around that too, but that came later. So at the time, like ICE was talking about doing one, CBOE and CME, and we all kind of like were in this competitive race to
Yeah.
do it. The way CME approached it, I thought was actually pretty smart. They started early with an index. So they had 4 constituent spot exchanges that
Mhm.
formed the index.
Mhm.
So they built this proprietary index with a company called Crypto Facilities, and basically just ran the index and allowed people to consume it. There was nothing else.
Yeah.
So there was an index, and then my team built a cloud streaming version of that index so people could consume it through an API.
Yeah.
And we just kind of let that run for a couple months, and people got familiar with it that way. And then from there, we built the futures around it. So it's, you can think of it kind of like the S&P 500. That's an index, and then there's a whole suite of derivatives that were built around it.
Yeah.
Same kind of model where you build an index and you build derivatives that settle to that index.
Yeah.
And that was really it. Like we did that. It's built a cash settled instrument, and then there was a lot of hype around it. Aaron Foster on our team likes to joke that we tanked Bitcoin by launching this, and like to some extent, there's some truth to that.
Because it was like approved by the Trump administration. Well, Trump was in office, and wasn't there some speculation that he had approved it to like tamper down?
Well, this
on
is
Bitcoin price?
2017, so
It was like, so I'm going to go down like speculative rabbit hole because I did hear this from a few journalists back in the day. The Trump administration saw this bubble. this Bitcoin bubble popping up, and they approved the futures to go live, and then immediately Bitcoin price started tanking afterwards.
Oh yeah, that's a lot of BS.
Yeah.
Everything you
Yeah.
just said is wrong.
I like it though. I kind of like the idea.
No, it's actually it's a lot less sexy than that.
Oh,
Um,
okay, no
see,
fun.
you have to think about it this way. So at the time, there's only spot.
Yeah.
Okay, so the only position you could have in Bitcoin was being long,
Mm-hmm.
right? There's no ability to short it. And so my boss used to always say, like, you have three choices: being long, longer, or longer. You know, so it's like that was it.
Yeah.
So you have all these people with these like huge positions on and
Yeah.
riding the wave, right? And no one could kind of really take the opposite side of it. And also like people really couldn't hedge their longs either. They just kind of had to hold on.
Is this all institutional you're talking about, or is this
No, this is anybody that owns Bitcoin. So
there isn't anything on Coinbase or
not at the time, no.
okay.
You could literally just buy it. I mean, I guess maybe there was some shady perps where you could have sold
Yeah.
it, but like
Yeah.
not for like every.
Wow.
like,
Okay.
yeah. So no, definitely not for the institutional folks.
Yeah.
And like the institutional folks all had their own opinions. Like you can think of like Jamie Dimons of the world. They're
Yeah.
all like very skeptical about what this is.
Yeah.
And so flash forward to the futures launch, futures come out, and all of a sudden everyone can kind of take a short position on this because
Mhm.
maybe they thought it was overbought. And turns out it really was.
Mm-hmm.
Can't go up forever.
Yeah.
Right. And so part of what happened, there are other factors that happened, but people had the ability to short it now and add downward pressure.
Yeah.
And there was a a sizable retracement. But that's part of a market health.
Yeah.
Things don't just if it kept going up and up and up, this fall would have been much steeper than it was at the time. So, I wouldn't say we were directly responsible. I definitely think it played a factor.
Yeah. I don't feel that way. A little upset now. No.
Yeah. Yeah. Number doesn't always go up.
It does not. It's been kind of hovering at the moment too. So you guys launched that product, and then for yourself, were you like just basically ready to bounce to the next thing after that, or?
Well, it wasn't my only job at the time. Like,
Yeah.
I was part of the team that just was responsible for go to market. So
Okay.
go to market it effectively means talking to traders, talking to
Yeah.
banks, and what are called futures commission merchants,
Mhm.
and educating them and talking through like what is the margin, how much leverage do you get on this, what are the contract specs, like
Yeah.
stuff like that, and then like how do you market it and all that kind of stuff. That was the team that I was on.
Okay.
And then after that, like, you launch the market, and then the BD team goes out and tries to build volume and liquidity.
Gotcha.
So it was kind of like a logical handoff. And then for me, I went back to my strategy job and started working on other strategy projects.
Okay.
So that was kind of my role at the time.
Okay. Yeah. I just wanted to cross that T. So for Bitcoin to Hashrate, I think that's a thing, especially for people who are more like retail focused or haven't delved into mining yet. They hear of like Hashrate futures or whatever. They're like lost immediately. Bitcoin futures, they may be eye rolling already of like futures or
Sure.
derivatives, but
Yep.
like Bitcoin, probably get it. So can you bridge a gap between like the CME product that you worked on, Bitcoin derivatives versus Hashrate derivatives?
Yeah, for sure. Actually, that's a great segue. So when I joined Luxor, I was decently versed in the mining space, but not like entrenched by any means.
Mm-hmm.
So it's, first couple of months was a pretty steep learning curve for me, just learning all minor economics and stuff like that, which is super engaging. But the benefit I had when I joined Luxor is we had this thing called a hash rate index.
Yeah.
Shout out to Colin once again.
Yes.
So a hash rate index already existed. So you can think of this like we had a Bitcoin index. It was called the Bitcoin reference rate
Mm-hmm.
at CME. Now I already have this hash rate index. And for those people that don't know, hash rate index will show you what the expected value is of 1 terahash or 1 petahash of a hash rate, meaning like on a daily basis. So we talk in dollar terms, let's say it's $100. So if you have 1 petahash, you can expect to earn $100 a day.
Yeah.
There's also, you can look at it in BTC terms too, right? So we already had this index that basically showed what your mining hardware will get you from a revenue perspective. And so I was like, oh, that's great. And it was already widely referenced in the space. So it already had integrity behind it. And it's basically just a replication of an FPPS payout from a pool.
Mm-hmm.
And so so we already had this. We had an API around it. I was like, this is great. So like, we'll just build a derivative around it.
Yeah.
And so our forward markets are all based off of that expected value.
Yeah.
And so, and then the futures too. So like everything revolves around an index.
Yeah.
So CME, we built an index, built derivatives around it. Come to Luxor, we already have an index, and I just literally copied the same model. And it's a model that existed for well before I started my career.
Yeah. You mentioned FPPS. So maybe this is where the conversation is going to get like a little more technical for audience members.
I don't know if I'm equipped for this, but
you're like very well equipped, much more so than I. Marathon has been doing a lot of games with its block template production right now. Like you saw this week, they put out like their M block. For listeners, basically Marathon Digital, largest Bitcoin miner right now, right? Like public,
yeah,
at least largest public one in the US. They have their own pool. They create their own blocks, and they have the ability to put transactions in their own blocks however they want. They created a block template that on certain block screeners or viewers, you could see an M or their logo. And in order to do that, they had to like pretty heavily mess with the block.
Yeah.
People are now pushing back on that and being like, hey, you're messing with FPPS. You're messing with like the way that we calculate how to pay out miners for their transaction fees, or just pay out miners in general. When we enter a world of like more people doing that, which I think we will, as like more public miners gain more hash rate, and there's more like there's Strat V2, there's more block template creation. How does that change financial products like you guys are building?
Yeah, it's actually a really great question, and something we talk about internally quite a bit,
Yeah.
right? So I mentioned before, like the pool model is changing
Yeah.
before our eyes. And, you know, some of it has to do with innovation, and hopefully none of it has to do with nefarious activity.
I'm here for the nefarious activity.
Well, I think, I mean, there's potential, right? So we do a lot of like game theory around stuff like that. Like how could people use this to their advantage? Or
Yeah.
It's a lot more relevant now when you look at transaction fee spikes and like how that impacts pool payouts and stuff like that. Whereas like when I first joined, you had a flat like 2% of block rewards forever. And now it's like, I don't even know what the floor is, but let's say it's 7% up to 100%, right? Like, and it's everything in between. So now you have to be a lot more thoughtful about that kind of stuff. And so I think, you know, you should have Nick talk about this more than me, but like we're looking at like what this looks like in the future and like how this would impact our index, which will logically impact our, you know, our financial products. And like, is there a need for transaction fee filtering, or is there a need for a different, you know, type of pool payout, or, you know, is FPPS archaic and doesn't work anymore?
Yeah.
I know like we don't necessarily believe that yet. But there's others in the space that definitely believe that.
Yeah, I mean, like Ocean Pool's been putting a lot of tweets out about that. They're pretty pissed about it. I mean, Marathon even put out tweets that like, we're going to keep playing around with this. Don't include this in your FPPS calculations.
Yeah.
So
well,
like,
that's exactly right. So you have to start thinking about like what Marathon is doing and how that impacts your.
Yeah.
Or like, and then the other interesting things are like, what happens when you have these like fat finger transaction fees, right? That are like.
Yeah.
Like,
wow, how do you even think about that?
Yeah.
That doesn't happen on Bitcoin as much as it does on ETH because everyone's trading on ETH, right?
But it does happen.
It does happen. It's going to happen more too.
It's going to happen more, and it does happen. So you have to be thoughtful about how that impacts things. And so the long story short is we don't have an answer yet, but like we're putting a lot of resources into like looking historically on what are transaction fee spikes, you know, like real, like, you know, out of band transaction fees, and also like ones that are just like ridiculous. And I think, you know, Ocean Pool went on record as saying it was like they wouldn't even have the ability to refund a transaction fee that was, I don't even remember what the last one was. It was like several Bitcoin.
This is so sick. This is what I live for. This is why the podcast exists. Most of the stuff is just like energy or like ASICs.
Yeah.
This is the cool conversations. What does this look like for a financial instrument? Is this like if someone's going to arb you guys, let's say like there's FPPS is out of whack and people are just like ramping up transaction fees or playing games, how does that impact you guys? Is that just like making the product more expensive or out of like the pricing isn't correct essentially?
Well, this is hypothetical because I don't think it's happening right now.
Yeah, definitely hypothetical.
I think you'd have to make an adjustment to how your index is calculated to avoid manipulation. And so when we launched our futures contract, like our index calculation was heavily scrutinized by the CFTC.
Yeah.
So like we had to justify safeguards to make it
Yeah.
non-manipulative. And so we're comfortable with where we're at, but like we have to constantly monitor that and test it. And so that's why we look at this.
Okay.
So to answer your question, like if we did feel uncomfortable with how the landscape was changing, we'd probably have to make modifications to the index, which in turn would have to be reviewed by the CFTC.
Oh, it has to be reviewed again.
Yeah. Well, I mean, if you make material changes, yes.
Oh my gosh.
I mean, it wouldn't be the end of the world because you're actually doing it. You're doing the right thing because you don't want something that's easily manipulated or even remotely manipulated.
Yeah.
So everything you do is for the integrity of the market and make sure the customers are protected.
Mm-hmm.
So, it's like one of those things that, it would suck and it'd be a pain in the ass, but you got to do it. Otherwise, if you don't have integrity in the market, who the hell is going to trade it?
Imagine talking to CFTC about this was difficult in the first place and then going in and being like, oh, there's people like minting dick butt JPEGs on chain and it's messing with our index.
Yeah, well, we didn't get that far in the weeds. Unfortunately, like the binomial guys are very well, they're very close to the CFTC. They've gone through several regulatory licensing so that they handled the brunt of the CFTC stuff. So that was good. But yeah, you're right. Like we, oh my God.
This is why I love this industry.
Yeah, I was just going to go do a presentation on dick butts on, yeah. Oh God.
Yeah. Okay. Well, that's not where I expected things to go. But I do want to keep pulling on this technical thing for a second. You brought up ordinals and transaction fees as being something you guys could hedge in the future. I think that's going to be like a pretty powerful tool in the future where you have like wallet providers or exchanges that want to have minting events at certain times or they want to offer like the ability to have their customers transact. And so like they're taking a hedge on a certain amount of block space over time so that they're able to like fulfill their customers' needs.
Yep.
Is that a thing you guys see developing pretty quickly over the next 12 months or is that that quickly?
Well, I mean, it's already there, right? Like you already have pretty wild transaction fee volatility.
Yeah.
And to me, like I think about it a bit differently from how you framed it.
Okay. I want to hear that then.
Yeah, I think there's two things, right? If you're a miner, your revenue, historically speaking, is just mostly tied to difficulty and Bitcoin price, right? If you're looking at hash price from a USD denomination. And so like that's what you planned around. But now like you have these pretty wild swings and most of them are like in your favor, but like projecting out what your revenue is going to be when you have transaction fee look like an EKG, like it's difficult. And so our thought was that's the first thought is like for a miner, let's say you want to capture, a big spike in transaction fees and like kind of lock in that revenue. Like that's what this tool would do.
Yeah.
Or let's say you're someone that, has a viewpoint on ordinal project that's coming out, like Runes, for example, and you want to, take a long position on transaction fees going into, project launch. That's what this would give you.
Yeah.
But where it also becomes interesting is it gets you outside of the mining world because anybody that's impacted by transaction fees and the cost of, transacting on the network has exposure to these wild swings.
Yeah.
So like if you're in a period of super high transaction fees because for whatever reason, that could be detrimental to your business. And so this would give you the ability to kind of hedge against that.
Yeah. And this is good for you guys. Like volatility is good for
for sure.
Financial products, right?
Well, it's good for demand of financial products, right? Because the whole goal from a hedging perspective of financial product is to remove that volatility.
Yeah.
Or capture unnatural swings in the market.
So it's bullish Luxor.
Yeah.
Right?
Totally.
Yeah.
Bullish Luxor, bullish Hashrate derivatives.
Cool. Well, I mean, honestly, that kind of topped off all my questions. Anything that you think we missed for the product announcement or like what you guys are up to?
Yeah, like I said, we're growing the team. We got a couple of we have this product that's launching on Monday and we'll be growing that throughout the rest of the year. I think we would like to launch probably another 2 to 3 products this year. A logical next step from futures is options.
Okay.
So this is like another level of nerdiness.
Yeah, let's dive into that before we close out then.
Yeah, so options it gives you a lot more ability to hedge in bespoke ways.
Mm-hmm.
Or the cool thing about options is you can capture premium on your positions, meaning like you can earn yield on
Mm-hmm.
your hash rate, which would be super
Don't
interesting.
say Bitcoin and yield.
Yeah, I don't get that. Like yield existed long
if
before.
you were in like Anchor or any of those things,
No.
you would understand.
I do understand, but like what people need to understand is like yield has existed well before
Yeah.
Celsius or BlockFi.
Yeah.
It's there are a whole suite of yield products in
Yeah.
traditional finance. It's not really a bad word. Like,
Yeah.
do you want to earn more money on the money you have? That's what yield is.
Yep.
Dividends are yield.
Yeah.
Like it shouldn't be a dirty word. But the point being, the options give you the ability to kind of capture more revenue on the existing asset that you have.
Mm-hmm.
And then they give you a whole buttload more of bespoke hedging products as well. And it can be, if you know what you're doing, it can be a lot more capital efficient and cost effective.
Yeah.
And so what you saw at CME is they launch futures and then they launch options.
Yeah.
And that's across all commodities, not just Bitcoin.
Yeah.
Hashrate's a commodity as well, so we view futures as the first step, options are the next step, and there's already a huge demand for them.
Okay.
But in order to do that, you have to build up liquidity in the underlying. The underlying would be the futures.
Okay. You have to have the lockstep.
They're
progress.
intertwined. Futures and options are intertwined. Like you need both.
Okay.
But
Cool.
yeah, other than that, I mean, yeah, Luxor continues to grow. I think we've almost doubled in size since I joined 2 years ago.
Yeah.
I think our arrow is definitely pointed up. And
Yeah. I
Yeah.
think so. I'm bullish Luxor.
good.
I have no attachments to it.
Well, you have no ability to short Luxor, so you have to be bullish.
Yeah, that's true. How could I do that? Could we like create like a perp or something?
We'd
would-
have to, yeah,
Theoretically, how would you
a
short
Luxor perp.
How would you theoretically short a Bitcoin company that's not public?
Yeah, they'd have to be public, or you'd have to like, if you had some,
The answer is crime.
crime is
honestly.
yeah. There's a way to do it, but it would be pretty complicated.
Well, Matt, thanks for joining the Mining Pod. Appreciate your time.
Yeah, thanks for having me.